Boy, oh boy, that time flies when you're having fun, doesn't it? Back in the action here once again this evening. It's about that time of day again here, of course. It's Wednesday evening. It's May the 29th, 2019. My name is Joseph, by the way, and this, of course, is your nightly newsletter. Now, remember, guys, I help traders find reliable, dependable, high-quality, usually profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. And my job tonight is to identify the best setups, the best levels, the best opportunities we see setting up for tomorrow. That's Thursday's trading session. And tonight we're going to cover some oil. We got some S&P, Nasdaq, gold, and of course, how could we forget about that mighty euro? We're going to jump in here to oil tonight because oil has some really big clues on this chart, and we're going to use those clues to put together our plan for tomorrow in inventory Thursday session. Let's grab that crude chart here, dig into this, because we got a lot to cover here tonight on this video newsletter. First of all, what's the first that stands out right now on this oil? Big, strong move higher. Anytime I see a big, strong move in one direction, I always know I'm probably going to see a second leg. Now, I don't want to buy high because you'll see we're back inside this range here. We'll talk more about this in more detail here in a moment. I don't want to chase this move going higher. I want to find key levels of support to be a buyer on. I've got levels at 48, 26, and really this whole area right there. I would love to be buying this pullback here right on this crude. I got a bunch of support levels I'm watching, and believe it or not, I've actually got 3 different patterns that I'm watching for right now if the market pulls back. That way, no matter what we get, we'll find some way to get on that sucker right as it pulls back. I'll also talk about tonight, what if we go get stuck inside this range? And I'll also talk about, right, what if the market keeps going higher as it makes that run up to that big round number at $60 a barrel. Got some big news tomorrow too on the schedule for crude, so we're going to dig into that here in more detail on the video tonight as well. Over on the S&P, the S&P is bearish here this evening, as you can see, into a trading range environment. Anytime I see a range-bound market, I always know I want to buy low. I know I want to sell high. I want to stay the heck out of that middle. Buy low, sell high. I've got a bear bias to it, which definitely tells me specific patterns that I want to use to buy low and sell high. I'm looking at some key levels of support below. I've got some key levels of resistance above. We're talking about buying that low. We're talking about selling that high. And obviously, right, I wouldn't lie to you, right? I'm always watching for the potential breakout. So we'll talk about what a breakout looks like, how to buy it, how to sell it, and how to avoid some really easy pitfalls or kind of traps that are set here on that S&P here for tomorrow. Over on the Nasdaq is very similar, right, to the S&P. Big bear move down today into a trading range. That tells me buy the low. It tells me sell the high. Avoid that middle. I'm looking for levels of resistance overhead. I'm looking for levels of support below. And of course, we'll talk about the right entry patterns, right? The specific entry patterns to buy off that low, the specific entry patterns to sell off that high. Because remember, right, with a bear bias, being a seller is a little bit different than being a buyer, right? Because that bear bias. We'll talk all about how to use that bias tonight for the Nasdaq and obviously, right, for the S&P 500. Over to the gold right now. Been watching rollover on gold as I've been mentioning so far this month. We did get a bit of a surprise rollover here late in the day today. We'll talk more about rollover and how you know when it's time to roll over. And you might notice right now, gold looks a little bit strange here right now. We'll talk more details on this tonight on the video. But the bottom line, though, is no matter what it is, right, rollover got lower highs. I got higher lows. This market is coiled up inside of a range. I'm not surprised because we have, again, rollover, obviously, but more importantly, we've got some big news on the schedule set up for tomorrow morning. So we'll talk about what a breakout looks like, right? I want to buy low. I want to sell high. But honestly, with some big news coming tomorrow and with the rollover continuing into the 819 contract, I'm looking for breakouts, break up, break down, and I'm looking for an easy way to trade them. We'll talk about that strategy here tonight on the video as well. And of course, how could I forget the euro, right? Boy, that euro has been stumbling around here. It looks like the euro's been drinking here this week. It's definitely been a wild ride on the euro, as you can see in front of you, right? Straight down, straight up, straight back down. It's been a wild one, and as you can see here right now, we're definitely bearish here on that euro. There's no doubt about that, right? We're definitely bearish on that euro, but at the same time, though, I've got a funny feeling here. We're rolling around, right, from down, up, down, and yeah, I'm looking for a buy here going back up into this euro. I know. I almost kind of choke a little bit when I say buy on the euro right now because it's definitely not a bull market long term, right? I know I'm going a little bit against the grain on this, but it does look like we may end up right back into that 12,000 big round number, right? Or we may try to make a run for that retest of that big kind of V bottom we saw right earlier on in the month. I'm going to talk about my plan to buy it. I'll talk about my plan to sell it. And of course, we'll go over all the details here tonight on this video. Before we jump in though, because I got a lot to cover here tonight. Big news tomorrow, rollover on gold, Eminis, oil, euro, right? Got a lot to cover here tonight. Before we jump into the charts here and go over all the details for tomorrow's trading strategy, I want to make sure to remind you there's an easy way to make sure you never miss another newsletter video, and that is to make sure you join our mailing list. Every evening, Monday through Thursday, I send out my nightly newsletter. I've been doing it for, over 10 years now here at School of Trade, right? Go back and look at my YouTube channel if you want proof of that. And you'll notice here, right, I send an email out to my list every evening right before I publish that video. I would love to send you an email as well so you know exactly when that newsletter goes live. All I need is your name, your email address, and hit that subscribe now button. Now remember, your job's not done when you subscribe, right, to the list, right? You've got to go in and check your inbox. So make sure you log into your email, check your inbox, find that verification link. I'm going to send you 2 emails. One is a verification email, and the second is going to be a welcome email with a bunch of goodies in there. So if you don't see it in your inbox, check your spam, check your promotions folder in Gmail, right? And make sure you whitelist those emails so you always get the good stuff every evening. Right before I publish the video, I hit send to my email list so you all know exactly when it's time, right? When it's go time for the nightly newsletter. Now, also, one more thing here. I need your help. I'm always asking for your help, right? Always asking for your help. I'm listening. I'm always listening to your feedback. What do you love? What do you hate? What would you change? What would you never want to change about this nightly newsletter? How about some different markets? Are there any other markets that you would love to see me add on this video? Or how about remove from this lesson, right? Anything you don't want to see me cover? What do you love? What do you hate? What would you change, right? I love to hear from you guys. And to do that, just post me a comment in the comment section below this video on YouTube or on our blog here at sidewaysmarkets.com. And while you're down there, giving me some feedback in the comment section, do me a favor and give me a thumbs up on the video tonight. I work really hard every evening to put this newsletter out every evening for you guys. If you appreciate it, if you watch it every evening, if you love the value we give here on our YouTube channel, give me a thumbs up on the video and make sure you subscribe to our YouTube channel. Hit that little bell icon so you always get notified every time I publish something new. And if you want to, don't forget, you can always pick up the phone and call me here in the office. I'm always here. And even when I'm not here, that toll-free phone number will forward right to my mobile phone, and I look forward to answering, right, that phone call. It's always kind of funny. People always get kind of taken back when I answer the phone. They go, "Oh, I wasn't expecting you to answer the call." And I'm like, what were you expecting me to do? So no chat bots, no call centers, right? No being transferred to some random, right, some telephone tree somewhere, right? Call the office. My wife Megan and I are real people, and we really look forward to working with you guys minutes here. So call the office anytime you have them, and don't be surprised when we pick up on the first ring, right? And you can ask us all your questions about data, charts, brokers, markets, membership, free pass to our trade room, right? Whatever you have questions about, just pick up the phone and call that toll-free phone number anytime you have any questions. But for now, though, we got some work to do. We got some work to do here. Let's get those sleeves rolled up. If I had sleeves on this t-shirt right now, I'd roll them up for us here and get to work tonight. Tomorrow is Thursday. Now, before we jump into the news for tomorrow, remember, there's a lot going on into the end of the month, right? We talked about this last night. What were the two words that come to mind end of the month? One is volatility, right? And the other one is impulsive, right? Impulsive. Volatility meaning one, right? Volatility meaning that as we get closer to the end of the month, for whatever reason, and this is not just end of the month, this is end of the day, end of the week, end of the month. The end of the month is classic volatility because traders who are either down in the red on their account, they're taking bigger risks, and traders who are well in the green on their account for the month, right? What are they doing? They're being a little bit loosey-goosey, right, with their rules and being more loose with their entry parameters. So volatility definitely tends to pick up, right, at the end of the month. And again, it's not just the end of the month. It's the end of the day, end of the week, right, and the end of the month. And you'll notice here, we have the end of the week and the end of the month coming right around the corner here. So volatility is definitely expected. Also, impulsiveness, right? Impulsiveness. You know, think of like a teenager, right? I'm sure there aren't that many teenagers probably watching this video right now, but I'm sure there are lots of adults out there that have kids at home, right? And, you know, think of how erratic and impulsive, right, a teenager can be. All the hormones flying around, all the stuff going on in their head, right? That's what the markets tend to do as well. So we always kind of expect the unexpected as we go into the end of the month. You know, one of the things we always talk about in our trade with our clients is that we always kind of expect the unexpected. So we're always planning, what if it goes up? What if it goes down? What if it goes sideways? And we're always throwing out those different ideas so we're ready for no matter what comes our way. So be aware of that tomorrow and on Friday as we go into the end of the week. Obviously, we'll come back tomorrow night and do a week finishing newsletter for tomorrow night. But tomorrow, volatility and impulsive personality is definitely on our radar. Now, let's dig into the news we have here for tomorrow. We got really two blocks of news here. One is the GDP, the international trade, and the jobless claims. Now, I'm not going to worry too much about the jobless claims. And the international trade is probably not going to have that big of an impact, maybe a little bit here, but I think the whole China-U.S. trade negotiations thing, or trade battle, I guess you would say at this point, right? I think that's going to take center stage over the trade goods or international trading goods, but GDP. GDP is definitely something we want to watch here for tomorrow. They're expecting, I believe it's 2.8 to 3.2 is the consensus. Everyone's thinking the GDP tomorrow, the quarterly GDP, will come out at a 3.0. We're going to find out tomorrow bright and early at 8:30 Eastern time. Now, just a heads up on this, GDP is one of those news events that has more of a broader impact as opposed to an acute impact, right? What do I mean by that? Well, there's some news events, right? There's some news events that when the news comes out, the market goes crazy, right? That would be an acute impact, right? Right when the news comes out, it goes crazy, right? And then calms down afterwards. GDP doesn't seem to have that type of response, right? Markets, again, will do something like this. They may move around a little bit, but then they'll tend to find a new direction, right? They tend to be more of a broader reaction. And what you want to know about that is that it will take some time for the market to kind of absorb what it's listening to or what it's hearing tomorrow from that GDP. So the rule I always follow when it comes to GDP is give it 15 minutes. right? Give it 15 minutes, wait and see, because what happens is, that GDP report, I mean, think about it. What is GDP, right? The gross domestic product. It's the entire production, right, of the U.S. economy. And so it's got its tentacles in every single industry, right? So it's not going to be like it's not going to be like a inventory report later on, right? Later on in the morning. That's going to be an acute reaction, right? It'll be 11 o'clock, and then all hell will break loose, right, on crude oil. You're not going to have that same response to the GDP tomorrow morning. So I wouldn't recommend trading the GDP report, but be aware, though, that will have a very big impact into the rest of the day on Thursday, into Friday, and obviously, right, into the month of June. As I mentioned earlier, though, right, we also have that petroleum status report tomorrow at 11 o'clock Eastern time. What does that mean for us? Well, to be honest with you, it really doesn't mean a lot for oil traders. Oil traders are pretty much used to trading in those first couple hours of the morning. We're not really conditioned as oil traders to trade the afternoon because it's just so hit or miss. It's so low volume. So, as an oil trader myself, I'm always focused on that 8 a.m. to 11 a.m. time frame. Tomorrow, I'll definitely start watching the market's personality after 10:30 a.m. But, for the most part, though, we should have a pretty normal, typical day tomorrow, right, on crude oil. Sometimes the markets get a little bit funny on inventory days, especially on a Thursday, because it's kind of off balance a little bit. Remember, most of the time, this report is at 10:30 on Wednesdays, right? Usually that inventory report is at 10:30 on Wednesdays, but whenever Monday is a holiday, they push it back to that Thursday at 11 o'clock. In my experience, we should have a pretty good day tomorrow on oil, but if things are kind of choppy and sloppy, it's probably going to be anticipating that oil inventory report at 11 o'clock Eastern time. We'll grab a look at that chart here in a moment, and you'll see we're going back into that range from earlier on this week, which we talked about in last night's newsletter. So we'll see what will happen tomorrow, but be aware, most likely a full session tomorrow morning, right? 11 o'clock, of course, is that weekly petroleum status report. And for me, after 10:30, right? After 10:30, I'll be watching closely to see how this market and the price action feels. And, once we get to 10:45, 11 o'clock Eastern time, we'll start backing off that crude, let that acute reaction, right? That very strong, impulsive reaction that will come out at 11 o'clock Eastern time. All right, so that's the major news here for tomorrow. GDP and the weekly inventory report. Again, end of the month, volatility, right? Impulsiveness. And of course, again, as I mentioned earlier on in the week here, we've still got the U.S.-China trade talks going on. We've still got the EU election kind of impacting, right, Europe right now. And so there are some underlying themes in the market. Mueller had a press conference today, so I'm sure that will get everybody stirred up for tomorrow as well. So there are definitely some kind of under the surface veins that may get hit here. So we'll definitely be keeping our eyes and ears open in our trade room tomorrow. And of course, we open up our trade room every morning at 8 o'clock Eastern time, and we'll put the plan together there as well. Speaking of which, let's get ready for tomorrow's trading session. Whether you're in Asia, you're in Europe, or you're here with us in the U.S. trading session, I want to make sure you guys are ready to party here. We all know there's money to be made out there in these financial markets. The problem is the markets are always a little bit like a puzzle, right? You got to put the puzzle pieces together, and the more experience you have, the faster you can put those puzzle pieces together. So my job here every night on this newsletter is to help you get better at putting together those puzzle pieces, because it really is as simple as practice makes perfect. And don't forget, everything we talk about tonight on the video, I cover in much more detail inside of our very detailed and professional grade membership courses here at schooloftrade.com, which we'll talk about later on in the video. Speaking of which, though, let's get into that video here now. Talking about oil here first. We got crude, S&P, Nasdaq, gold, and euro tonight. Oil starting off. I got this big move up here. Anytime I see a very strong move in one direction, anytime I see a strong move in one direction, I always expect to see a second leg. Knowing that I expect to see that second leg, there really is, really right now, there's a premium on finding levels of support. So where are some key levels of support that I can use? I've got a level here, obviously, at 48. I've got a level here at 26. And what I really hope we're going to use is this reversal line. I'm not sure if we'll get that deep of a pullback, but that will be a beautiful level right there at 21. Now you'll also notice I've drawn a trend line right over these highs. I brought it down to these lows. It looks like this is the best fit for that hidden channel. It may be a little bit lower than that, but I'm always a believer in err on the side of caution. Closer is better. I'd rather know where it is than be thinking it's going to be cut, than be thinking it's going to pull back even further. The bottom line is this is a level of support that I can use here as well. So buyers are definitely in control. They're not just in control. It's a very strong move up. Anytime I see a strong move in one direction, I know I'm probably going to get a pullback and a second leg, maybe even a measured move on that pullback, right? Size of this move, size of that move, that might be what we get tomorrow, right? We'll obviously know more once we get the pullback. Now, speaking of the pullback, what are some options for me right now, right, to buy off a pullback? Well, let's talk about this because there are quite a few different ways that we can buy pullbacks. It's one of the best parts about this, because when I see a market nice and strong like this, I know the odds are so good we go back to this high. The problem is timing the entry, right? We all know there's money to be made in pullbacks. It's just timing the entry. Sometimes the market is a shallow pullback. Sometimes the market, right, is a real deep pullback. The problem is shallow pullbacks, they don't give you a very good risk-reward ratio. You're buying high. The other problem is that deep pullbacks, well, now they tend to be top-heavy, and sometimes they turn into reversals, right? So here are three patterns I always watch for. One is if I can get a really deep pullback here off the high, I'm watching for what I call a two-legged pullback. Now, two-legged pullback patterns, let's do this. Let's go a little bit lighter there. 1 and 2. Perfect. I'm going to draw a trend line down over that top, all right? Draw that trend line and then use that trend line as my level of support, right? We call these two-legged pullback patterns or 2LP, right? Two-legged pullback patterns or 2LP. Okay, you'll know this because it'll pull back, right? It'll pull back, it'll try to go higher, and you'll see one more leg lower, right? One more leg lower. Draw that trend line over, right? Up and over and go. Now, that pattern can also be combined with, okay, that's a two-legged pullback pattern. That pattern can also be combined with a seller failure. Let's say, for example, that we don't get that obvious two-leg pullback. We just kind of run lower, right? If we make a run going lower here now, that moving average comes over, and what happens? We're going to see sellers will try to sell off that moving average, right? They will. Short-term sellers will try to sell that pullback, and that's exactly what I'm looking for here. I want to see those bears take the bait, if you will, and again, I'd love to see it down around this area here. That would be ideal. It doesn't need to be that deep. It just needs to be deep enough to get below that moving average, enough to get those sellers, right, to think this market now is worthy of a short off the moving average. Once I see those bears trying to sell off the moving average, now I know exactly where their stops are, and I can now look to buy right into those stop losses, right? We call this a failure pattern, right? First one was a two-legged pullback. This one's called a failure pattern, okay? Now, there's actually one more setup I like to watch for. Once it runs up, then watch for the pullback from there. So you can actually double dip this pattern. This pattern is notorious for what I call a double dip, and that is you get the failure, you take your one-to-one, and we'll talk more about one-to-one and trade management inside our membership classes. But, basic idea here is that you take the size of the signal creates a size of the target, right? You take your first profit target and you move a stop point of entry and then grab the next pullback. So oftentimes that one-to-one, right, that becomes kind of a pullback area there and wait for the next pullback. Usually that pullback will come right about that same level. It almost always pulls back right to that point of entry. So what I'll do is I'll go quick first target, move that stop up, move the risk, and then wait for that pullback as we go, right? That obviously is called a pullback setup. Now, one more pattern here. One more pattern. Since these markets are going to be impulsive tomorrow, what if it really runs? Right? What if it really runs? You know what I mean? I'm not talking about two-legged pullback here. I'm not talking about a pullback to the low. I'm talking about what if this thing really runs? Now what do we do? If it really cooks lower here, is it a bear market yet? No, it won't be yet. We'll talk about that in a moment here, guys, so don't worry about that. But how could I buy it now? Well, if we see a lot of momentum going lower right now, I've got to respect that momentum. I love a good deep pullback because I can get a nice small amount of risk to a big amount of reward, right? Deep pullbacks are great. The problem with a deep pullback, though, is they get top heavy, and they become top heavy, and the market ends up becoming a reversal, right? So how do you time your entry on that properly? You wait for the bears now, who are going to be licking their chops, right? They try once, let them try twice. You got it. Then we buy. Then we buy right into that failure. Does that make sense? Right? Think about it. Think about it. We pull back, let the bears try to sell off the moving average. When they fail, right, we're buying into their failure. And again, if we get lucky, we'll get the double dip, right? The failure into that pullback. However, if this thing really tanks, right, if it really runs, now those bears have a lot more confidence. The bulls are beat up. What do? We've got to respect the bearish momentum. We already know, though, big move up. We're probably going to see a retest. We already know that. So we want to be a buyer. Wait for the bears once, right? You don't want to buy into that bear failure at that point. It's too bearish at that point. Let them try once. Let them try twice. Then, once we see him try once, higher high, try twice, now we can look for the proper signal, and now everybody's roped in on that short side for a nice, easy, nice, beautiful risk-reward ratio. Risk small, earn large. Those are the types of trades. These are the trades I really like to wait for, right? Just when you think the market turns bearish, and whoops, it goes right back up to retest the high. And how do you know the market's going to likely do that? You know, a lot of folks ask me, Joe, how do you know the market's going to probably go back up like that if it does give you a pullback? It's all about the prior leg. Okay, if you're here for the first time today, or maybe you haven't heard me say this before, newsflash, right? Here's the reality. The pattern is not the important stuff. It's what happens before the pattern setup. Okay, we'll talk more about that obviously tomorrow in our trade room. But those are 3, if not 4, different setups I'm watching here to be a buyer right now. Now, what if we don't get the pullback, right? What if we run into this range up here? Because after all, this is that range, right, we talked about in last night's newsletter. Big drop down, right? Big move back up now. What if we get stuck in here? You know, then what do? Well, now if we get stuck inside this range, this becomes a bull market, obviously, into a range-bound market. With a bull bias, what do I want to do? I want to buy below that low, right? And to do that, what I'll use is we call a 2-try failure pattern. So if we end up going sideways here, right? Couple hours into the overnight session, we end up going sideways on this. I'm looking for a 1-try. I'm looking for a 2-try. Once you see those bears try once, try twice, below the range, that's the trick, right? That's the key. Then we know those sellers are roped in. We also know buyers are eagerly waiting to buy it back up, and will buy back below that range. Okay, below the range, buying back up into that range. Remember, though, you don't want that pattern in the middle. Okay, we'll talk about that more on the S&P and the Nasdaq. You don't want that pattern. You don't want it right here. Right? We talk about this quite a bit in the newsletter. It's the same pattern, right? That's the same exact pattern. But look where it is. It's inside the range, right? You want it to be down, right? Get those 2 tries and then back up outside the range. That way you get that nice, good risk-reward ratio on the trade. What if the market keeps going higher? Right? What if we keep going higher here? What if we keep going higher? If we keep going higher, it's probably going to take the form of a wedge here. You'll notice how we're kind of wedging out here a little bit, right? Now, what do wedges tell us? Wedges tell us to find prior swings and then look for traps into failures and go. So imagine for a moment here, if I can there we go. This is my wedge. And again, this is if the market keeps on going higher, right? If you're trading in Asia here or in Europe and we see this sucker keep going higher here, we know where they're trying to go, right? They're trying to get back to basically 60, basically. Okay? The only problem is I don't want to buy high because you don't want to buy above that wedge. What you want to do is you want to mark up some prior swings, wait for that pullback, get those sellers, just like before, get those sellers to try to sell it, and we can then buy right into their failure. So the key, of course, is even if it keeps going higher, wait patiently and get that pullback. And when you get the pullback, the best way that I like to time my entries is to do it on the back or in the wake of the stop losses from the opposite side. Right? Make sense? So imagine now we go up, we pull back, we keep going higher, right? We pull back, moving average comes over, bears try to sell it. Same idea, right? Same idea. Failure into pullback, and then up we go. Target is up at 60. What if I'm wrong? What if this market really tanks? How do we turn bearish? A 1, 2, 3 reversal pattern. 1, 2, 3. 1, 2, 3 reversal. What does it look like? Probably three things, right? 1, strong move down. 2, pull back to the moving average. Got to be a pullback to the moving average. 3, strong move off the moving average. Once I see that strong move off the moving average, that's when I know, okay, we're done. We're now bearish. Now, what do? Do I sell down here? No. We are professionals. We wait for our opportunities to come to us. We don't chase them. We wait. We draw that line. We then mark up that low. We go up to the top of that move and then draw off that high. You'll notice draw off the top of that move. That'd be the better fit for it. And we're selling off the high, right? The sweet spot is that original low combined with the high of that channel. That's the good stuff right there. So now we get a good plan whether we pull back, whether we go higher, if we go sideways, or if we rotate back in the opposite direction. Don't forget tomorrow, 11 o'clock Eastern time is that major news. So get to it early. Over on the S&P. The S&P right now is bearish in momentum into a trading range. Now, this range is definitely a bit questionable. I thought it might be something like that. You'll see how the Nasdaq looks. The Nasdaq is a good example of what I was thinking with this range. We'll grab the Nasdaq here in a moment. The Nasdaq would be a little bit different example, but same principle. Bottom line right now is I've got higher lows, I've got lower highs, moving average is flattening out. It's not a surprise considering that we have GDP tomorrow morning at 8:30 Eastern time, so it's not that big of a surprise. And I also wouldn't be surprised tomorrow, right, if this whole if this GDP report causes a breakout. So we'll talk about a breakout here as well. Bottom line is we are bearish right now, right, into a trading range. What does a range tell me? A range tells me to buy low. A range tells me to sell high. And what else does it tell me? It tells me to stay away from the middle. Okay, stay away from the middle. The reason why you want to stay away from the middle is because you kind of lose the edge, right? The bears are waiting above, the bulls are waiting below. In the middle, there just isn't anybody, nobody who has experience and the firepower to move these markets. Nobody's trading the middle of it. So patterns oftentimes fail, and more importantly, oftentimes patterns will kick you out, right, just to run back into the range without you. It can be very, very difficult to trade inside the middle of that range. So we're buying low, we're selling high, and we're avoiding the middle. Now, what's very important is, like I mentioned earlier, it's not the setup that you're worried about. It's what happened before the setup. What is going on right now? It's bearish. So what does that mean? What does that mean? Well, it means that I can sell relatively aggressive, right? I can be relatively aggressive off that high. I've got to be a lot more patient and a lot more conservative to buy off of that low. Does that make sense? Right? Because we have a bear bias, all I need really is the market to go up, the buyers try and fail, and I'll sell it back down again. But if the market goes below the range, well, now I've got to be a little bit more patient, don't I? Because again, the market's not bullish. So for me to buy, I've got to wait for, remember that oil, that deep pullback? Let them try once, let them try twice, and back up from there. And again, I'm going to warn you. I'm going to warn you right now. You will see patterns that will go up, back. You'll see 2 tries, but by the time you can get into it, you're right inside the range. You know, like this one, for example, right? I have no desire whatsoever to take that failure pattern. I don't care how beautiful the pattern is. I don't care what level of resistance are there. It's inside the range. There's a very good likelihood this price will go lower, kick me out, just to watch it set up and collapse back down. So how do I buy it? How do I sell it? Let's talk about selling it first, because obviously, right, this is a bear market. How do we sell it? Well, first of all, I want to go up. I want to get this market trying to go higher. You know, one of the big things you notice on this chart is we really haven't seen much of a pullback really ever since that big run down over lunchtime in yesterday's trading session. So this big pullback, or this lack of any big pullback, a very small one here earlier, I definitely wouldn't be surprised if we see this market really make a run for it. And you'll notice, obviously, right, I've got some levels up above and below the range just to make sure I'm ready for it, right? So what I've done is I've taken my trading range, right? I've used a very simple calculation, right? Bringing it down, bringing it up, creating levels of support and resistance above it, right? Got my sell zone overhead. And ultimately what I'm looking for is I want to see this market go up. I want to see these buyers try to buy into that pullback. And then, of course, at that point now, we know exactly where the stops are. I know stops now are waiting just below that low, and I'll sell right into those stops. The key, though, is get outside the range. We know we have a bear market, so it takes a lot more than just a strong move up for this to be a breakout, right? So we'll look for the market to go up. I want to see these buyers try to buy the pullback. Again, moving average comes over. We now know where stops are, and we're selling into those stops. You'll notice also I've drawn this trend line and brought it up here. So don't be surprised if later in the day tomorrow, right, we get a chance to use that trend line, right? If it sticks around here for a while, we may go up 1, 2, and back down from there off that trend line. Kind of like a hidden channel almost, right? You take this line, put it up there. I'm going to use that as resistance. Okay, I want to sell above the top of that range, let them go up, let the buyers try, and we're selling into their failure. Now, how would I buy off the low? Again, same idea. Get below the range, stay out of the range, get underneath the range. Now, we're very bearish at this point, right? So what's the best way to be a buyer in a bear market? We saw an example right here, right? We go down, the bears try once, the bears try twice, and look what happens. Everybody was waiting, right, for that second try. That's exactly what we're looking for here as we go back down again. And again, you'll notice I got my buy zone down here at 64 to 57. I've got my kind of hidden channel, if you will, right? Take that trend line, bring it down there. I'm going to use that as well as a key level of support. But honestly, get me inside of either one of these buy or sell zones, and I'm good to go. What I'm looking for is a strong move down. Look for the sellers now to try. I'm not going to buy into that first attempt because you'll know there's probably going to be more bears waiting, right? There'll probably be more bears waiting for that second attempt, right? In fact, in my trading, I'm always looking for that second attempt, right? Because that's usually where the good stuff happens. So you don't want to try to buy into that. You want to wait for them to try once, try twice, and then up from there. And ideally what you're trying to do again is be aware if we get some huge signal candle, right, you don't want to trade that middle. Like I talked about last night, toss a limit order in and put it right below that low so it can come back to get you in, right, as it makes the move higher. Okay, that happens all the time. So bottom line is buy low, sell high. What's a breakout look like? Just like the 1, 2, 3 reversal, the 1, 2, 3 breakout. Can you think about what that might be? I'll bet you can. Right? 1, 2, 3 breakout. 1, strong move up. 2, pull back to the moving average. Got to pull back to the moving average. 3, strong move off the moving average. Remember, it's all about that pop. It's all about that pop off the moving average. Because remember, it may go up, it may pull back, and it may look very convincing, right? I mean, how many times have we seen this recently where we jump up, The moving average comes over. You see buyers throw the kitchen sink at it. And what happens? It kind of sputters out and rolls back over back into that range, right? I've got to see that continue. That has to continue. And I know you're more than welcome to call me afraid of it or a wimp or conservative or too cautious. But here's the reality, guys. Reversals and breakouts. Right? Reversals and breakouts. If you were to look at the gravestones of all the bankrupt traders around the world, right? We've all heard that statistic. What is it? 99% of all traders fail. Why do they fail? They're trading breakouts. Why do they fail? They're trading reversals. Okay, those are these breakout reversals. Are you sure? Of course. Call me a wimp. Call me a sissy. Call me conservative. Whatever you want to call me. But I'm going to outlast traders who are trying to trade breakouts and trying to trade reversals. So for me, I'm not interested in gambling. This is a lifelong career for me. I want to see it go up, hold, and go. The good news is that we usually get a really prime setup once we get that 1, 2, 3 breakout. Mark up that high, mark up that high. Remember, down to that major low. Okay, don't use this one. You can, but this one's usually going to be where you get the best results. And then again, your sweet spot is right there, right? That's your sweet spot right there. And then, of course, those patterns right there, right, that'll be kind of like a... Imagine there's that trend line, right? This will be one of those failure patterns that we talked before. It's that same basic idea as we mentioned earlier on crude oil. Does that make sense? Right? So imagine that right there. Okay? Again, don't try to predict the breakout because the market's balanced, right? When I think of a range, it's a balanced market. So wait for the breakout. And that breakout works in both long or short sides. And it's not just the S&P, right? It works for pretty much every market because you're waiting for confirmation, waiting for that new 1, 2, 3 breakout in that hidden channel. Which reminds me, right? I have so many more examples of breakouts and crown reversal patterns, the reversal patterns we do like to take, failures, two-legged pullbacks. What I'll do is I'll drop a link up here in the upper right-hand corner. I'll also put a big red button below the video tonight on our blog. If you want a deeper dive into all my favorite entry patterns, you'll learn all about our 3-step strategy. And the best part is, as part of that free trading course, I'll also send you a daily chart recap or a daily chart lesson so you can see kind of how I look at the markets and what we do every day right in our trade room. It's a great free class. Grab that free class in the upper right-hand corner. Pause the video, not to worry. Make sure you register for that free class. And as always, check your inbox, check your spam folder because it may end up there, right, if it doesn't go straight in your inbox. Let's keep going, though. S&P looks pretty good. How about some Nasdaq? Nasdaq is very, very similar to the S&P, so we won't spend too much time on this one, but it's a bear mark going lower, right, into a trading range. Now, the big difference here on this chart is you'll notice this is a blended range. These take some practice. I talked about this earlier, really, being a technical analysis, right, or technical analyst, or being a technician, right, as they call us, it's like putting puzzle pieces together. And after you see the puzzle a couple times, you get better and faster at putting together, right? Over the years, I've learned that in a lot of situations, you'll see a range that starts off, right, as a smaller range there and then kind of grows into, right, a larger range. Kind of notice how interesting that is. It's a blended range. Quite cool, right? I mean, there's a lot. Your mind has to expand a little bit for you to really appreciate how an expanded range actually works. The markets are like a symphony orchestra where everyone is in a different place and there's no conductor, right? And there's no sheet music to follow, right? Pretty cool. Anyways, bottom line is I always find this stuff pretty fascinating. But the market started off as a range. then kind of expanded into, but you'll notice it was actually setting up as the half of that range the whole time. Pretty darn cool. The bottom line is it's a range-bound market. I'm sure not everyone out there geeks out on this stuff like I do, but if you do, I'm sure you can appreciate that as well. It's a blended range. That range, and of course, we'll talk a lot more about ranges in that free course that I mentioned earlier. It's a range-bound market. It's a bear market. So what are we doing? We're staying away from the middle. You got it. We're buying low. And of course, we're selling high, right? How do we sell high? We sell high with buyer failures. We go up, let the buyers try to buy the pullback, right? And we're selling into their failure. How do we buy low? We let them go lower. We stay out of the range. And what do? We let them try once. Do we buy into their failure now? No, right? Because there are more bears waiting up there. We wait for one, we wait for two, and then we make the run up into that range. And you know what? Sometimes it goes straight down, straight back up, and you don't get it. But guess what? It's not about getting every single trade, right? It's all about getting the ones that are going to give you the highest winning percentage. In my experience of teaching literally tens of thousands of new traders, the most important thing is making sure we keep your confidence levels higher, right? Higher confidence levels without risking or without sacrificing risk reward. The reason why I say this is because, yeah, every once in a while you'll see a market will go straight down, straight back up, and you'll miss it. But a lot of times they won't. And most of the times they'll go down, one, two, and they'll keep on going. I want to really focus on what's the most reliable setup, because the most reliable setups, they increase my confidence. And as a new trader, confidence is like oxygen. You can survive a little while without it, but if you lose your confidence, quickly your days will become numbered. So remember, don't just force it going higher. Let them try once, let them try twice, right, and back up from there. If you can take highly reliable setups like this one, get a good risk reward ratio on the trade, you have a very, very bright future in front of you as a professional trader. You know, and I mentioned earlier, right, it's not enough to just have a winning percentage high. You need to have a winning percentage plus risk reward. The reason I say that is there's lots of setups out there with a big stop, right, a big stop and a small target. Of course, right? You go out and sure, I can risk 50, right, to make 10. I'm going to have a 90% winning ratio, right? I'm going to have one hell of a winning ratio. But the problem is we all know your days are numbered on that, right? If you're well, do the math, right? You're risking 50 to make 10. You take one loss, that just wiped out 10 of your winners, right? You talk about confidence. Right? You'll be suicidal, right? Trading all day long and one loss wipes you all out. These types of strategies, they look good on paper, but human beings just really struggle with those. In my experience of teaching real people how to do this, it's all about getting your confidence level high enough without sacrificing risk small to earn large. If you have experience, you know how difficult that is. It's not easy to get high quality setups that also give you a good risk reward ratio. That's right. That's kind of where we've all kind of seen these diagrams, right? Where you kind of put all these pieces together, right? Like that, right? That's the sweet spot right in the middle, right? That's the trifecta right in the middle, right? High quality setup with that risk reward. We'll talk about that in more detail, right, in future videos. Bottom line though is same thing. 1, 2, 3 breakout. Possible short covering rally, mark up that high. We're buying off that, right? Buying off that low. Where's the target for the buyers? Buyers are trying to go back up into that range. Target now for those sellers. Yeah, there really isn't one. That's the hard part, going lower right now. Going lower, right, I've really got to be aware that when I get this 1, 2, 3 breakout going lower, it's going to be a trail your stop and get as much out of it as you can before it probably ends up inside of a range. We'll cover that obviously tomorrow once we know more in our trade room. So make sure you come out and join me tomorrow morning, 8 o'clock Eastern time. How about some gold? Now, I'm going to warn you, gold tomorrow is probably going to be a little bit iffy. You got GDP tomorrow morning at 8:30. Okay, then obviously it's rollover. I mean, look at this chart right now. As you look at this, and I didn't get to it early enough here tonight, guys, I'm sorry. But if you compare the volume on the 619, remember gold rolls over every 2 months, right? Every 2 months, and it skips the 10th month. And I'm not going to go into too much detail on this, but every 4 years we get the 10th month. There is a wrinkle to that. I won't bore you with those details, but pretty much though, gold's every 2 months, right? That's '02, that's '04, that's '06, that's '08, and again, it skips the 10 month, right? It goes right to 12 most of the time. Every couple years, we'll actually get a 10th, right? We'll actually get an October contract on it. I don't want to go into too much detail on that. We can talk more about that in our training classes. The bottom line though is we are now on the 6, and we just saw volume shift now to the 8. You'll notice volume now has more, as the 8/19 contract, the August 2019 contract now has more volume on the gold. Don't overcomplicate this. Remember, as a client of mine, I'm going to make sure you know exactly what to be trading and everything that goes along with it. Our beginner classes here at School of Trade talk about all of these details, and we do it every day in our trade room. But just in case you're wondering though, right, we do have more volume right now on that 8/19 contract, and so we do want to now make the move over to that 8/19 contract. Now, here is something that most charting packages struggle with, and that is blending two contracts together on gold. It's just on gold. You'll notice we never have this type of problem on any other markets because most markets are going to slowly roll. Gold will literally just show up one day and go, okay, we're done, and it's the next contract. So you've almost got to think of it as you've got everything before, right? Everything before, and then now this is the new 8/19 contract now as we go. So I won't lie, we definitely need some more information to really get a good feel for this, but I think the chart speaks enough for itself, right? You've got lower highs, you've got higher lows. I'm expecting a very neutral market tomorrow ahead of that GDP report. And then afterwards, maybe we get the breakout, right? That 1, 2, 3 breakout. So knowing that we're neutral, knowing that we have a range, what's the best way to trade a range? But this is not just any range. This is a triangle. Now, triangles are pretty interesting, guys, because triangles, they are ranges, but there's one big difference. They've got the pivots and they have an expiration to them. First things first, once we get to the point of that triangle, we almost always see an explosive breakout. Now that breakout sometimes holds and keeps going, but a lot of times it'll fail and come right back down to that range, right? It'll go right back to the middle of that range. Okay, so that's the key. That's kind of the expiration I was talking about, right? There is kind of an expiration date on that range, so be aware of that. Now, the most important thing right now on the gold, though, is to mark up the swings. Mark up that swing, mark up that swing, mark up that swing, and that swing. Okay? You want to mark up the edges. This is the one big difference. Well, I guess second big difference, if I'm counting correctly here. I'm trying to have some fun with you guys here tonight, right? Another big difference is it's always getting narrower. It's not like a rectangle where every high is the same as the previous high. So the moral of the story is what you want to do is you want to find those highs and then use those levels to sell high, use those levels, right, to buy low. Okay? So when I look at my chart right now, I can see, right, there's a level, there's a level, there's a level, there's a level. Okay? That's why the battle zone above and the battle zone below. Okay? Triangles are really great patterns because they tell you exactly where to look. And most importantly, we are almost right at the expiration of that range. Okay? So what are some options here on the gold? Option number one, because we are neutral, right? Because we are neutral, I can see a breakdown, get those sellers to try to sell off the moving average. You know what I'm going to say, right? And buy into their failure. Okay, because we're neutral, right, I can buy into that failure. Now, from here, going higher, because we're neutral, I can sell into that failure. Okay, makes sense so far? Now, we do have one variable that I'm watching, and that is this strong move down, right? That strong move down. So if we get it to run, if it really runs, which it may do anytime we see a strong move in one direction. The problem is that thing is so old, it's tough to tell how much the market really will pay attention to it tomorrow. The bottom line is, though, is strong move down. We're gonna probably see those bears try to retest that low. If we do make a run for it, right? If it really hauls behind down to those lows, what's the best pattern? Make sure they try once, they try twice, then back up. You got it. You got it. So if they really put a whooping on this thing, go to the downside, right? You know, look for that special 2-try failure. Okay. So again, we go up. Buyers to buy the pullback. We're looking now to sell into their failure, right? We go down. Sellers to sell the pullback. We're buying into their stops. Remember, you want to stay away from that middle, so really get outside of it. But if they really cook lower, right? If they really run lower, make them try once, make them try twice, and buying up from there. What's a breakout look like? Like any other breakout. 1, 2, 3. Remember, it's got to pull back to that moving average. It's going to pop off the moving average. That pop says breakout. Mark up the high, mark up the channel, and we're buying the low of that channel. Target for the buyers up at 1,300. We're a good distance away from 1,300, but we're definitely in striking distance if we get that big news breakout tomorrow morning. Where are the bears trying to go? The bears are trying to go back down to that 1274, 1275 area. All right? Buy those lows, sell those highs, avoid those middles, and be careful tomorrow, right? Be careful tomorrow. A lot of people get spooked by rollover on gold, and for good reason, because there isn't a lot of information to work with yet. We just simply don't have enough of the puzzle pieces yet to put them down and see what works. Once we have more puzzle pieces, we'll be able to say, oh, look, I found a corner. Oh, I got the head, right? You can kind of put the pieces together where you think they'll be. And again, we'll do it together tomorrow morning in our trade room. Last but not least here, over on the euro. Euro is really whipping around here right now. Like I mentioned earlier, it almost feels like they should put a breathalyzer in this market right now. It definitely feels a little bit punch drunk here this evening as we go to wrap up the end of the month. The bottom line, though, is we know we are bearish here on the euro. It's very easy to see we are bearish. My only problem is this, though. We have this beautiful pendulum swing, right? If I look back to the left here, and I can see this big range, right? This is like forever ago. It's basically like 2 weeks ago. But we went down into this range, right? Into the range. Now, if you remember, this was the Draghi, right? That was the Draghi speech. That sent prices running and then back up from there, right? So we had all these shenanigans coming out of the ECB. And of course, right? The market runs higher. Now, once it runs higher, we saw last night that 1, 2, 3 reversal. It just turned right around on us. So a market that shoots down, that shoots up, that shoots back down, what does it look like? It looks like there's no direction on this. We are, for whatever reason, we're bouncing around, go down, go up, go down. I'm expecting us to want to go up. Now, I wouldn't normally be so confident with that, but when you look at the numbers here, look at the amount of the move above the range, and I mean, you can't make this stuff up. I mean, you can't make this stuff up. I can't fudge this, right? I know YouTube is filled with people who like to fudge their stuff, right? But I mean, you can't make this stuff up. Look at this, right? Got that range, goes up, goes down, and we're sitting right there on that bad boy right now, right on that pendulum swing right now. So the bottom line, at the very least, we know we're bearish. And we know we're sitting at major support. In fact, you can see we're also, if you really want to get into support, we're also way back at that low from, surprise, the end of last month. Isn't it amazing how that works? It's like the end of last month, we go up, we come all the way back down for the end of this month. Now, what happened at the end of last month? We saw that big rally off that low. Will history repeat itself? Hopefully tomorrow we'll get a shot to do it. So we know we have that low. We know we have the pendulum swing. The problem is we're bearish right now, right? That's the problem. And so here's the way I look at it right now. The way I look at it is I've got only a little bit more room to go for the sell side to reach our objective, right? Our objective is to get back down to retest that low. I have just a little bit of room to go on that. I have a whole lot more space to make that run back up. Just doesn't look like it's worth it for me right now to try to sell low here right now. So I'm not. I'm going to look for a much better risk-reward ratio. Now remember, a lot of people like to qualify trades solely based on risk-reward. They say, well, I took the trade because it's a lot of reward for little risk. The problem is, basing your trade solely on risk-reward ratio doesn't include the most important thing about trading. What is trading? It's pattern recognition and probabilities. That's all it is. So if you're going to choose to take a trade based on risk-reward ratio, right, like this one right now, I can see there's a lot more reward going back higher than there is going lower, but the market's bearish. So I can't just blindly buy it right now, because I'll tell you right now, a 20% reliability, a 20% winning ratio on a counter trend trade, I don't care how much lipstick you put on it, it's still a bad direction. It's still a low reliability trade. If I try to buy this right now, it's a very low reliability trade because of all that momentum going lower. So instead of trying to buy it just because of the risk-reward ratio on it, how can I get a good quality setup that also has that risk-reward ratio? You know what I'm saying? Right? So please don't make the same mistake that I did. I remember this like it was yesterday. I would just kind of talk myself into a breakout or a counter trend trade or some random trade that had a very low possibility of success, but because it had a good risk-reward ratio, I thought it was worth my time. The problem is, right? Like I mentioned earlier, you can put a fresh coat of paint on an old beat-up pickup truck, but it's not going to run like a brand new car, right? It's not going to run the way you want it to, no matter how you dress it up. So the moral of the story is that I can't just buy it. We know we're bearish. I want to be a buyer. Again, I wouldn't normally be so aggressive being a buyer, but with the pendulum swing right here, with us 1, 2, and 3 legs down, sitting at that major low, not that much room to go down here, it just seems like a better idea to be a buyer on this right now. And to do that, I've got to wait for those bears to get their hands on it first. Just like we saw on the Emini and the Nasdaq, I want to let these bears try once, try twice, and then look to be a seller right into their stops. Ideally, I would love to see this, a crown reversal. Go up 1, up 2, inside the battle zone, and a trap low. This would be the ideal scenario for tomorrow, right? Because I already know that with this market being so low, I already know traders, sellers specifically, are going to be waiting for a trap. Anytime we have a big bear move down, we know there are going to be sellers looking for that next leg. But when that big bear move down puts us at a major support level like this, the best pattern is a trap setup. And you'll learn all about trap patterns, by the way, inside that free course that I mentioned earlier. So make sure you grab that, and you'll see all kinds of examples of reliable trap patterns. The bottom line is, if I wanted to be a seller right now, I would choose to sell with a trap high. What I'd like to see us go up, try once, twice from the battle zone, and then trap low. If I could get the sellers trying to grab their traps, and then right when those bears are loaded up, right? Once they're in the boat and they're ready to go, once that train takes off the station, now I know where stops are, and I can buy right into those stops going higher. At the very least, I'd like to see us go up 1, right? Go up, get that up here, up 1, draw my trend line, right? And then that trend line now becomes my key level of support. Again, I just want to make sure bears try once, try twice, and then buying up into that trading range. Now, another scenario I'm watching for here is if it keeps going sideways. Okay, as I mentioned last night in the newsletter, if we see the sellers and they don't go lower, but they don't go higher, if the market sits and sits and sits, what that will tell you is the market is so bearish that even the people who are taking profit on their shorts are being sopped up. They're being absorbed by more sellers, right? So when we see a market go sideways down here, that really changes my appetite for getting long. And in that case, I'm going to look for one of two patterns. One will be a 1, a 2, and a sell. Again, this is if we sit sideways here tomorrow, right? 1, 2, and sell. Or a run lower with a 1, a 2, a crown reversal back up. That same pattern, right? That same pattern we talked about at the beginning is what I'll look for again at those lows. We call these crown reversal patterns, right? So big strong move down, let them try once. Up in that battle zone, try twice. Trap low. That is a beautiful, beautiful reversal setup. It's a very reliable setup as well. It's roping in the bears. It's buying as low as you can. That is doing everything in your power to get the odds back on your side. And then you've got a high quality setup and a good risk reward ratio. That's the cat's pajamas, right? When it comes to trading against the trend. If we end up going sideways here again, sitting here for a while now, run lower, same idea, right? 1, 2, I know it's small there, sorry about the size of that, right? But same basic idea there, and you're buying off that low. Obviously, right? Obviously, it takes some time because you're going to wait for that pattern to set up. All right, guys, great stuff here tonight on that euro. Don't forget, be careful on the gold tomorrow. We got that GDP report tomorrow morning at 8:30. And, of course, speaking of tomorrow morning, 8:30 Eastern time, we open up our trade room every morning, 8 a.m. Eastern time, Monday through Friday. And I want to see you there with me. You know, like I mentioned earlier, trading is a game of pattern recognition and probabilities. Every day we come out, we get those chart, right, those puzzle pieces. We put the pieces together, right, and we formulate a good strategy for the day. That it's patience, it's discipline to execute that plan correctly. I want to see you there tomorrow. We all know there's tons of profit to make every day in these financial markets. The tough part is the markets aren't always easy. I'll be there with you every morning at the opening bell to make sure you're doing this the right way. So come out and join us as a brand new member tomorrow morning, 8 o'clock Eastern time. To join us tomorrow as a brand new client, grab the advanced course. It's right below my ugly mug tonight on the video. Right below me, grab that advanced course, get registered, or as always, call me, use live support, right? There's a live support button right here. You're always welcome to use that live support tool. And if you're not ready yet to be a member, or maybe you're still trying to figure out what you want to do in the trading career, right? Grab that free trial. That free trial right to the left of me, that free trial comes with your free pass to attend the trade room. It also includes your free course, a daily chart lesson, right? And hundreds of examples of great setups we find every day in our trade room. Guys, I hope you guys love the video tonight. Don't forget, join the mailing list, join the free class. Thumbs up on the video. Drop me some comments if you have any questions. Call me if you need help along the way. And I'll see you guys tomorrow, 8 o'clock Eastern time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.